Hi and welcome back to my channel. And yeah, today, as you can probably already guess, we're going to talk about Google, or of course, as it's known for a long time now, Alphabet. Um, the earnings release is already a couple of days ago, so that was in I think April 24th. But yeah, it's something, it's a company I've been looking into because I think it could be an interesting case for a longer time, and now I think today is a good time to make this video because yesterday lost the company's stock price lost almost 10% in US trading on a particular news we're gonna get into. And yeah, we're gonna look at what's going on with Alphabet, with Google, and if it could be an interesting use case. So yeah, I would like to start with this flowchart. I love flowcharts, so this one is a very good one by this App Economy Insights website, and yeah, it just visualizes the income streams of Alphabet or of Google very nicely, and makes it very easy to understand what's going on. So I'm more interested in on the left part in this case than here on the expenses. So I think it's not that bad of an issue that my head is covering the right side, because yeah, the right side is a little bit opaque. It just lists costs, expenses, and R&D spending and stuff like that. So for the income, so as stupid as it sounds, how does Google actually make money? It's still very much still their core business. So I mean, of course, Google, so many different products, Android, hardware, smartphones, YouTube, um, I don't know, smoke detectors, the cloud business. But what's still remaining, what's still making money for them, is their search, the paid search. So um, essentially, if you Google something, if you go into a search engine, what is listed on higher up? And yeah, for anyone that's never done this, so this is basically the core of Google ad spending. So if you log into, if you make an account with Google AdSense and you pay to be listed higher and to be promoted, um, they offer the service, of course, to be promoted throughout all the channels. So for example, also on YouTube, but primarily, of course, search. So we see that with 50 billion, it's still by far the most important aspect of their business model. And yeah, as we've seen, the overall revenue increased 12% year over year. So in the first quarter, they made more than 90 billion in revenue. So a 12% increase year over year. That's pretty good. Unfortunately, they didn't report the quarter over quarter numbers, but I expect, of course, not that much of an impressive change compared to the fourth quarter, because yeah, for a search business, fourth quarter, when everybody tries to promote their Christmas products, will be better. But still, 12% year over year, pretty impressive. And yeah, 50%. So most important spends is still the paid search advertising. So the companies and businesses and individuals pay to be ranked higher up in Google. Then of course YouTube, 10% year over year, almost 9 billion. So that includes, of course, their ads revenue from Google, but also people paying for, I forgot what's the name of it, but the YouTube paid membership tier. So yeah, 10% again, impressive. Google AdMob, so 2% year over year again, 7.3%. So this is if you use these like embedded advertising products. So for example, if you program an app and you include the Google banner to handle the advertisement for you. And then of course, Google Play Store, 10 billion. If you put your apps on the Google Play Store, then you have to pay. And we see this. Oh yeah, YouTube Premium. Oh, so actually YouTube Premium is listed here under Google Play. Like other income streams, like subscriptions from Fitbit, Google Nest, Pixel, or other stuff. And then we have the cloud. So the cloud, 28% gain. So that sounds pretty impressive, year-over-year gain. But it's still very, very small. So 12.3 billion in revenue from the Google Cloud. So cloud, as we all know, that's the moneymaker. That's the cash cow. I mean, for example, Amazon makes way more with AWS than with the traditional e-commerce business. Or, of course, Microsoft with Azure. They have, I think Azure has more than 40% year-over-year gain in revenue. So Google is lagging here a little bit. We will come back to that later. But for me, the interesting thing is the opportunity with Google, I think, is in the cloud. So it's in Google Cloud to really scale that one up, because the cloud business is such a profitable business. It's such a growing business. Even we see it here. Like even we see here for Google, it's the biggest growth engine. And yeah, I'm a little bit familiar with. So I would call myself a cloud expert, so I have some cloud certifications, but for AWS, I'm not so familiar with Google Cloud. I just know that when you study for AWS, you always so you have to understand algorithms behind the functionalities, some of the features, and especially AI features. And a lot of the recent features for the AI functionalities, which are actually, let's be honest, they are driving the revenue in the cloud, are invented by Google engineers. So I think there is this vast know-how within Google, and there is this skill base and these functionalities in the Google Cloud that they really are. They should be able to scale this a little bit more. So they should take a little bit more revenue here, in my opinion. And that's of course where you can criticize them. Also, I think what's really good with the Google Cloud is its search performance. So, of course, since the company's core feature is search, if you use the Google Cloud for your own tech products, you can leverage it to improve your own search by using those cloud capabilities of Google. So, the cloud and search, in my opinion. I mean, do I think YouTube will go away? No, don't think YouTube will go away anytime soon. That's why I'm making YouTube videos. Of course, there are other platforms. I mean, there's Rumble, or there are other streaming platforms like Twitch or something. But I actually think that, for example, live streaming is going to increase on YouTube. And maybe don't expect too crazy growth there, but I still think it's going to be a growth engine for the company as well. Just looking at those income streams, I'm thinking, okay, this is pretty good. This is a tech company with some solid income streams, and some interesting businesses which have potential for growth. I would say especially the cloud. So what do you think the stock is going to do? As I mentioned earlier, the stock, it just plummeted almost 10% yesterday, 9.3%. And if we look at the longer term trend, we see slight growth, but the 1 year trend, we see a pretty downward trajectory here. And what is going on here? And looking at the PE ratio, 17:31 PE ratio. So that's a pretty low PE in my opinion. So that's that's definitely not a rising tech company. I mean, if you think of tech companies, you think of sky-high PEs, you think of 30 and higher, not 70:31. So that's lower than a lot of like old school manufacturing companies or trading companies. And they even pay a dividend, so also not for tech companies, too usual. So it's not a crazy dividend yield, 0.5%, but they pay a dividend, which is nice to have. And they've just increased it with the latest earnings again by 5%. So if you get that income, you get a 5% bump up. So I think that's slightly higher than inflation, so that's pretty good. And but of course, so these are characteristics, and I think we are at an interesting inflection point. So we're at this inflection point where the market is trying to understand, okay, this is a tech company, but it's not a startup tech company. So it's not what is the right valuations here? And I think this is where potential opportunity comes in, because this is where the market could be starting to value it as an industrial company, like an old school small growth industrial company, and you seeing, okay, no, but I still see some pockets of growth in there. And of course, what are the major threats? Why we had this 10% decline and this general down trajectory. So I think we have two major things going on. First, we have what I would call antitrust threats. So we have in Europe, of course, constant investigation into the practices by Google, if they are a monopoly or if they're exploiting the market unfairly. But also in the US, we now have this, it's going on since 2020, where this case where there's investigated into Google and other practices. And so the first one is if they actually have a monopoly with Chrome, so their browser, and there is this push that forcing them to potentially actually divest Chrome, so sell Chrome. And the other one is their position within the marketplace, I would say. And for example, like within Apple, they're paying to be the preferred search engine. And so this drop of the day happened because an executive of Apple had to admit in court that Google is paying to be the recommended search engine within Safari. And interesting, so that it's actually an Apple case that triggered this development. But actually they're getting paid handsomely. So I think a lot of people inside Apple are not interested in losing this payment, but they might be forced to by the law. So first, what I said, we're talking about the two threats. So first we have antitrust, and the second one is this whole AI story. So this AI shift that we are watching throughout all industries, unless you're living under a rock. And so AI shift that we're seeing. So the story is that, of course, people are using more and more generative AI applications as a first point of contact, and not primarily to Google. So before, of course, for everyone's start page on the internet was Google. That's where you did all your activity. And now the first thing that most people do is open up an AI agent, open up ChatGPT, open up Perplexity, and start typing in the questions there. And of course, that's a potential threat for their core business. So if you're paying to be listed on Google, but you're actually going into ChatGPT or Perplexity to search for stuff, then people might start paying less for that search advertisement. So this threat to their core business is currently very much emphasized. That people, instead of 50 billion being paid for search, this money will go into what I would call AI search engine optimization. Of course, this is a valuable threat. I mean, this could be happening in some form, but it's still very abstract. So currently there is no paid AI search engine optimization service. So of course, for example, OpenAI could release something like this, like similar to Google's ad platform, could release a platform where you log in and you register your company and you pay for certain keywords. Let's say I pay for burgers, and whenever somebody asks ChatGPT about burgers, then they will recommend my business. Something like this will be coming, and I think it will disrupt Google in one way or another. But it's not here yet, and also I don't think it will disrupt it completely because these AI agents, they still rely on the public data, so they still actually crawling the web, and they're still actually using that information from the web. So yeah, it's still an advantage for Google to be in this this position, to have to be the number one service to actually list web positions. And as I said before, like Google is actually some of the players that are very advanced in this field. So they're actually, when it comes to analyzing search and crawling the web, I mean, they are the number one company to do that. So I think they're in a unique position to do that. And so I think this search advertisement revenue could be going down a little bit, and it probably will. But they are also in a position to profit from that. So they have their own AI. They have the new AI search support feature. So yeah, if you Google on your smartphone, then the first thing that Google shows you is, or if you ask a question, then it's actually this AI prompt that answers you this question. And I think this is, I first seen it in some other browsers, like for example a Brave browser. But yeah, it's as we know from Meta, it's not about inventing a feature. It's about showing that you have the ability to adapt and see what features are working. And for example, this feature, I think they took and they implemented it fairly well into Google. And also the other services will profit from that, like especially the cloud. So I think if AI is starting to grow and more businesses implement AI into the services, Google will profit as well, and their revenue from the cloud will profit as well. So I hope I'm trying to make my case. So what I'm trying to say, I'm not trying to say, going back to the stock here, that Google is the fastest growing company out there, and the one that is going to be the one that's going to profit from this AI boom. So it's, of course, I mean, I don't know, maybe Palantir is profiting more from the AI boom, or OpenAI, which is not publicly traded, is obviously profiting more from the AI boom, or Nvidia in terms of the hardware. But with investing, it's about opportunity in relation to the valuation. And in my opinion, an evaluation, a PE of 17.3 for a company like that, it's an opportunity. And I think these threats these two major threats of antitrust regulation and of AI disruption could be a little bit overhyped. So antitrust, I mean, I've been hearing this ever since I can remember, that these big companies are under investigation. And even, let's say, they cannot, for example, continue to pay for being the number one service on Safari. Yeah, I think the users still make the decision on which tool they like to use. So probably a lot of users would still be using Google Search. I don't think this kind of behavior will be completely disrupted away. And yeah, the article I had open earlier, for example, like now Apple is saying I read this article so you don't have to, they move to AI search, ending the era defined by Google. So the thing is, they're exploring, they're directly implementing other services like Perplexity or OpenAI into the search on the iPhone. But it's still a bit abstract, and I read through this article. They just list that they want to do this, but I don't. My takeaway is not that it's yet that specific. Okay, people will stop searching on the web. I don't see that happening. So I'm actually thinking that my point is that I think Google is in a position to profit more from a continuous AI boom than to losing out of it. And then this valuation of 17.3, in my opinion, is pretty is an interesting case. So yeah, but as always, of course, make up your own mind. Look into it yourself. Let me know if you think Google is dead and it should have a PE of 7 or something. Like 17 is too high. Would be interesting to get some other perspectives. And yeah, thank you. See you next time.